Nearly 1/3 of housing markets in the United States are beginning to experience price declines. So, where does Fort Wayne, Indiana stack up in all of this? Stay tuned, that's what we're talking about today.
Keep it real, I keep it real, I keep it real, just keep it real.
Hey, what's up guys? It's Sam Hartman. As always, keeping it real estate here in Fort Wayne, Indiana. And I'm here to bring you the clarity that you need to be confident real estate consumers out there in the world. And today's topic is an important one. It's one that buyers are watching very closely. It's one that sellers are wondering if they need to sell their home, can they sell their home, and can they sell it for the price that they would want? And we're talking about price depreciation and price declines that are happening in 96 of America's largest metro markets. That is 1/3 of the top 300 markets that are starting to see price decline. So let's look at some of the trends, and we're going to talk about how Fort Wayne stacks up in the middle of all this as well. First of all, let's take a look at the national snapshot. We actually see that home prices across the nation are only rising a very modest 0.5% year over year as of May. So when I say year over year, that's going back from May of 2024 to May of 2025. But let's look at this trend that's actually been persistent throughout all of 2025. In January, we saw only 31 markets actually had depreciating home values year over year. But in February, that number rose to 42 markets. By March, it was up to 60 markets. In April, that number hit 80 markets. And now in May, 96 markets are beginning to see price declines. So really, we saw that number rise from about 10% of markets in January to now being over 30% of markets here in May. And here's a few major reasons why. For one, it's mainly located regionally to Sunbelt states. We're talking about Louisiana, Florida, and Texas. This is where the bulk of these 96 markets are going to reside. And one of the big reasons is post-pandemic housing boom accelerated prices so quickly and outpaced the growth of incomes across the United States as well. And a lot of these Sunbelt states saw very large influx of population during that post-pandemic time. And now as work from home orders and careers and things like that are coming back to some more normalcy, they're losing some of that population. So you have less buyer demand moving out of states. You have more inventory of homes coming to the market and homes sitting on the market longer, which is creating this imbalance of supply demand in some of these markets. Now, the research firm that I get this data from, Resi Club, what they expect is that this number is probably going to continue to rise throughout the year. And Zillow actually forecasts that national home prices for the year will actually be a negative number, negative 0.7%. So overall, it'll be a fairly flat number, not too high, not too low, but a lot of these 96 markets are dragging that number down, dragging that expectation down. So that's the macro picture, but what's happening in the micro? What's happening here in Fort Wayne, Indiana? Should we have concern about our market? And what should we be thinking about going forward throughout the rest of 2025, whether you're a buyer or a seller? And one of the first things I want to talk about is just Fort Wayne's price appreciation on the whole. Let's take a step back and let's look at a broader picture, because sometimes we get so stuck on the recency bias of maybe a few negative headlines. But if we go back 20 years, Fort Wayne's price appreciation is actually almost 125% over a 20-year period. I actually just listed and sold a house that this family lived in for 47 years. So not only did they pay off their mortgage, but they bought that house for pennies. And over 47 years, they paid off the mortgage and they had amazing price appreciation that now they're moving on to the next stage of life and they're able to cash in on. So the 20-year price appreciation in Fort Wayne, almost 125%. Let's go 10 years out. The last 10 years has saw 115% price appreciation. And now we're going to zoom in even closer. The last 5 years, we've seen 53% price appreciation. The last 2 years, we've seen 9.8% appreciation. And now, right now, year over year, Fort Wayne's price appreciation is tracking at 2.71%. So although this headline talking about 96 markets that are seeing negative price declines, price depreciation, Fort Wayne is well outpacing that national average of a very minor 0.5% price appreciation. So the national average right now, year over year as of May, is 0.5% price increases. Fort Wayne is sitting at 2.71%. And just going from April to May, we saw a 1.11% bump in prices just in that 1 month alone. So Fort Wayne's trend with the spring market, which is where we typically start to see stronger price appreciation and price increases, is tracking on trend in terms of the seasonality of the market. So this is the great news. Fort Wayne has always been a conservative market. In the housing crash of 2008, our price declines were only 5% when the national average was over 20%. And so here we are with many markets experiencing price softening and price declines, and Fort Wayne is remaining conservative, remaining steady, and remaining strong compared to many of those markets. So what does this all mean? Well, while many major markets are beginning to see declines, Fort Wayne continues a positive growth between 3 and 4%, indicating that our housing market, again, is being conservative and resilient in these times. Some of the reasons this might be is because the Midwest did not get the same inventory surge that many of these Sunbelt states received as well. We didn't have the same influx of population during post-COVID times, so we aren't having the outflux of population in these current times as well. And looking ahead, Indiana as a whole is projected to finish the year between 2 and 4% price appreciation. And it's actually looking that Fort Wayne, Indiana will be on the top end of that with our strong performance so far this year. So what does this mean for buyers? What does this mean for sellers in today's market? For buyers, it means that prices are still rising. So even though interest rates remain high, if you can get into the market sooner, the sooner you're going to take advantage of those price increases. For sellers, the good news is prices are still rising. Your equity and your value still remain intact, but we are seeing increasing days on market and growing inventory and competition as well. So the product that you bring to market as a seller needs to meet buyers' eyes, expectations, needs to meet their demands as far as what they're spending and the quality and condition that they'll be receiving in their homes. And if it's not there, if your home is not up to those market standards and conditions, you probably will sell at a lower price. So in a landscape where almost 1/3 of our nation's markets are seeing price declines, Fort Wayne remains very strong. So if you want more specific zip code data to your specific area in Fort Wayne or surrounding areas, if you want specific information about your neighborhood or your home, make sure to reach out. I can provide you even more context and clarity for your next steps so that you can be confident consumers going out there in the real estate world. And if you found this information helpful, guys, make sure you like and subscribe to my channel so you don't miss my future videos and insights. Thanks for keeping it real estate with me today.
I keep it real, just keep it real.